Picture this, a gray morning on Wall Street, 1929. Crowds gather outside a grand marble bank, panic echoing between the columns. Inside, the tickers have stopped. Numbers that once promised fortune now mark ruin. Billions disappear in a single week. Men clutch newspapers like life rafts. Women stare into the glass, searching for answers. But the story you're about to hear is bigger than a crash. Every bubble in history has left something behind, not just bankrupt investors, but broken lives. From tulips to tech stocks, greed has a pattern and a body count. The question is, when the next one bursts, what will it cost us this time? Let's rewind 4 centuries. 17th century Amsterdam, the Dutch Golden Age. Merchants crowd the taverns, their ledgers open, their eyes glittering with ambition. The object of obsession isn't gold or land, it's flowers. Tulip bulbs, rare and radiant, worth more than a craftsman's home. Ordinary citizens mortgage everything to join the frenzy. A single bulb trades for the price of a ship. And then, overnight, the market collapses. Paper fortunes vanish like smoke. Families lose homes, reputations, even lives. It's the first great financial bubble, and it plants a seed that will bloom again and again through history. Every bubble begins with hope, a new idea, a promise of easy profit. Someone says, "This time is different." It never is. Hope attracts greed. Greed attracts leverage. People borrow to buy, then borrow again to keep buying. Economists call it exuberance, but it's more like a pyramid made of trust. Each investor stands on another's shoulders, believing the base is solid. The moment one person doubts, the whole tower trembles. And when it falls, it crushes far more than numbers on a chart. It crushes faith. Faith in systems, in leaders, in the very idea that hard work can protect you. In 1929, that faith shattered. Factories closed, farms withered, lines for bread stretched for miles. By 1933, 1 in 4 Americans was out of work. Children went hungry while bank vaults sat full of frozen credit. Across the ocean, desperation turned political. Germany's economy collapsed under inflation and debt. Fear became a weapon. From the ruins of speculation rose the specter of extremism, and the world plunged into war. The Great Depression wasn't just a financial event. It was a global, emotional fracture, a wound that proved money, when misused, can alter the course of humanity. Fast forward to 2008, different suits, same story. This time the product was mortgages. Paper promises stacked so high, even bankers stopped knowing what they sold. When housing prices fell, the illusion collapsed. Families lost homes. Retirees lost savings. Governments rushed to bail out the same institutions that caused the disaster. And once again, the architects of collapse walked free, their bonuses untouched. The world watched, angry yet powerless, as another bubble burst not in silence, but in injustice. Because bubbles don't just crash markets, they corrode trust. They turn optimism into resentment, ambition into blame. When one person fails, it feels like misfortune. When millions fail together, it feels like betrayal. That betrayal fuels movements, protests, even revolutions. When people realize the game is rigged, they stop playing by its rules. The French Revolution followed famine and debt. The Arab Spring began with soaring prices and hopeless youth. Financial pressure isn't abstract. It's the hidden spark beneath political fire. Look closely, and you'll see the same fingerprints in every century. The banker promising innovation, the politician calling it progress, the public believing prosperity has no price. Then comes the reckoning. Hope gives way to panic. Greed gives way to blame. We reform, we regulate, we vow, never again. And then we forget. New technology arrives, new markets open, and the cycle restarts. Hope, greed, collapse, reform, repeat. History doesn't just rhyme, it compounds. Why does this keep happening? Because greed is adaptive. It wears whatever mask the age demands. In the 1600s, it was tulips. In the 1700s, South Sea shares. In the 1800s, railroads. In the 1900s, stocks. In our century, digital tokens and infinite credit. The medium changes, the motive never does. Greed feeds on the illusion of control, on the idea that we are smarter than the past. But the past always collects its debt, and the cost is measured not just in dollars, but in trust, dignity, and sometimes in blood. Every collapse redraws the social map. Families who thought they were secure slide into poverty. Workers lose pensions while CEOs exit with parachutes of gold. Entire generations grow up skeptical of institutions, hoarding cash, fearing risk. The emotional residue of a crash can last longer than any recovery. Economies heal faster than people. Today, the same warning lights flicker again. Debt has never been higher. Markets swing on rumors instead of fundamentals. Algorithms trade faster than human thought. We've replaced the marble trading floors of the past with glowing screens, but the psychology hasn't changed. We still chase the mirage of endless growth. We still believe someone else will catch us when gravity returns. But gravity always returns. The pattern is simple. Hope becomes greed. Greed becomes collapse. Collapse becomes reform. And then the cycle renews. Each era swears it's learned its lesson, yet each era leaves the next a little poorer in trust. Because the real damage of a bubble isn't what it does to markets, it's what it does to memory. We forget that speculation is a luxury of peace, that credit is confidence made visible, that money is only faith printed on paper. When that faith evaporates, societies shake, governments fall, wars ignite, and long after the graphs recover, the ghosts remain. The worker who never found another job, the child who learned money meant fear, the nation that turned rage into revolution. All of it, born from numbers that rose too high too fast. So where does that leave us? Standing once again at the edge of euphoria, convinced our innovations make us immune. But history is patient. It waits for our confidence to peak, for our hubris to harden, and then it whispers the same reminder it always has. Nothing grows forever. The true cost of every bubble isn't measured in the billions erased from screens. It's measured in the trust we lose in one another, in the lives diverted, the futures postponed, the quiet bitterness that seeps into a generation. Money can be printed again. Trust cannot. Hope, greed, collapse, blame, reform, repeat. That's the rhythm of civilization's economy, a loop painted in gold and regret. Because history doesn't just rhyme, it profits, and the brokers of tomorrow are already placing their bets on our forgetfulness. So when the next bubble bursts, and it will, ask yourself, will we finally learn or bleed again?